Hello there, many thanks for joining us on our midweek business news report. It's now time to bring you the feature on the show today as we focus on Nigeria's state of the economy. Now we're looking at this through the lens of the latest inflation report. The consumer price index, which measures inflation, increased to 16.82% on a year-on-year basis in the month of April this year. That's according to data from the National Bureau of Statistics, and now this latest inflation figure is the third consecutive increase, reaching an 8-year high. This is about 1.3 percentage points lower compared to the rate recorded in April just last year, indicating that headline inflation rate slowed down in April when compared to the same month in the previous year. On a month-to-month basis now, the headline index increased to 1.76% in April this year, recording a 0.02% rate higher than the rate recorded in March this year, which was 1.74%. The composite food index also rose 18.37% in April compared to the 22.72% recorded in April 2021. Now, the rise in food index was caused mainly by increases in the prices of bread and cereals, potatoes, yam and other tubers, wine, fish, meat and oils. Well, joining me now virtually to discuss this and much more, I have Ayodeji Ebo, the Managing Director and Chief Business Officer, Optimus by AfroInvest. Thank you very much for joining us on the Breakfast Show this morning, Mr. Ebo.
Good morning, and thanks for having me.
Now, this April inflation figure of 16.82%, reaching an 8-year high, doesn't come as a surprise and truly reflects the heightened global inflationary surge we've seen so far. You take a look at Ghana's inflation rate. It just released its consumer price index report barely a week ago, 23.6%. This is an high of about 18 years. The United States is also looking towards that reaction as well. We have UK inflation report also just in as well, 40-year high of 9% as we have food and energy crisis. All of these linked to the Russia-Ukraine crisis and then further exacerbated by domestic macroeconomic situations which are already triggered also by COVID and even prior to COVID. What do you make of the fuel and elements of energy and food prices across the world and here in the country?
Okay, thanks. I would say that while the inflation rate came as a surprise to a lot of analysts when you compare it to the forecast, but when you also check that with reality, you would also agree that what the current inflation rate reflects the current happening. So looking at what are the major drivers that led to this, you mentioned energy prices. Yes, we've seen oil prices increase significantly on the back of the Russia-Ukraine war. And when you look at the diesel price, which is not regulated, that impact has impacted significantly on cost of production. Also, you would also note that the price of wheat has also gone up significantly due to the war going on, which will impact on the price of bread and pasta and most of these cereals, which are highly consumed by Nigerians. And beyond that, also looking at even the FX, because of the reduction in FX liquidity, we've also been seeing a lot of the pressure on the rates in the black market, which will also impact. So coupled with the scarcity as well as the FX adjustment is also impacting significantly on prices. Transportation cost is also plays a major role in terms of cost of production. So by and large, it's really a very challenging time. That yes, while we have our own challenges, we're also the impact from the global challenges is also affecting prices of goods in Nigeria.
One of the biggest realities we are facing here, food inflation. The United States and Europe are racing fast now to improve food supply chains after India has banned wheat exports. Ukraine has been unable to export grains, fertilizer, and vegetable oil, which Nigeria is also dependent on, while the conflict is also destroying our crop fields and preventing a normal planting season. The global economy is really reeling from this whole issue of a ban of export, and everyone is just trying to save up as much as possible. Do you think, going by the body language of the Nigerian government, we have a clear-cut plan to attend to the food crisis strategically and also reduce our dependence on import? COVID has taught us some lessons. The Russia-Ukraine crisis is teaching us some lessons to be self-reliant, to be independent of all of these imports, wouldn't you say?
Okay, thanks. While yes, it looks like a no-brainer for us to begin to focus on how we want to reduce our dependence on the importation of wheat and some other food items. But when you also look at it domestically, there are a lot of array of challenges that we're going through. Insecurity is also one of them. So if there's insecurity, there will be reduction in production. Yes, we're entering, we're about leaving the planting season, but if there's insecurity, how much of planting are we able to do? Beyond that, you look at the structural challenges to move a product from the north to the south. We have to pay, consumers are paying for that cost. That's also very significant. And that is also feeding into inflation. So beyond just about why we need to look at production will not improve, and will not improve when we don't take care of insecurity across the country. So I quite agree with you that it's high time we looked at how we want to focus. Yeah, you know, even like the way the CBN has also been channeling funds, they try to look at what are those critical products, and they channel funds to ensure that we are self-sufficient. But there's a limit to what that intervention can even achieve if we don't take care of some of the structural issues like the insecurity, transportation, that would reduce the cost so that it's even affordable for the consumers to be able to buy. Because once prices drop and it's affordable, there would also be increase in the demand of these goods or these crops.
State of affairs that we have to look at is the fact that Nigeria's revenue generation strategy is also highly threatened by the missed OPEC production quota. We're having issues with that. Taxation still remains one of the issues we have to face. Like you've also highlighted, foreign exchange situations as well. We've not necessarily had the best of a sane environment. Now, what's your take really now on the next Monetary Policy Committee meeting of the Central Bank of Nigeria? There's a whole lot on the plate to serve as the agenda for today, which is coming up by next week. Now, to what extent really do you think we are likely going to see a shift in the stance? Prior to now, there's been a maintenance of rates, but there are analysts who think a tightening is within the corner. Do you share in this sentiment?
Okay, thanks. I think I would differ from that because my reasons are we need to first note that the major cause for our own inflation is cost push, not demand pull. In developed climes, if not for the recent uptick in energy prices, it's as a result of the injection of money into the economy, and that is why they are cutting back on that and trying to increase rates to reduce demand. But for us, if lending rates increase today, it's going to be an additional cost, which would impact on costs of production. Yes, while as an investor we desire to have a rate that will be able to reduce the impact of inflation on our savings, there's also that crowding out effect that happens when government interest rates looks very high. A lot of the private sector are unable to borrow. So we've seen in the last few months a lot of corporates issuing commercial paper, raising short-term funds to be able to finance. So I believe that raising the MPR is not the solution. is not the solution to our problem. There's a limit to what that can achieve. And if even the CBN wants to increase rates, what we've seen that has been used mostly in the past has been the OMO rate has been used to guide rates in the market. So I don't think that it will be right for us to see that uptick, except if the MPC wants to just signal.
Okay.
It does not necessarily translate into.
Okay.
Hello?
Yes, I'm here with you. Mr. Abel, wrapping up our conversation, let's just have your forecast for this month. Do you think we're going to see a sharper inflationary spike, or it's going to be a moderate movement we're going to see?
Okay, when we look at it on a base case, then you look at it's really going to be almost flat. We won't see that sharp increase we saw when we compared from March to April, because part of what led to this spike of 16.8 is when you look at the in April last year, I think it was around 18.1%. So that base effect also impacted on it on a year-on-year basis. But the reality is that with FX adjustment, when you see at the black market it's about 600 naira to $1, that would impact on prices. Also, you also want to look at in terms of food production. There's nothing much that has really happened there. Yes, while we go into the harvest season, we don't see any major decline in that. And lastly, the impact of energy prices. So on a month-on-month basis, we expect that increase will still be there, will still be around 1.8%. But on a year-on-year basis, expect that may be flat or slightly lower than last month.
Thank you so much for your time on the Breakfast Show this morning, Mr. Ayodele. We've been speaking with the Managing Director and Chief Business Officer, Optimus, by AfriInvest. Thank you once again for your time.
Always my pleasure. Thank you for having me.